One cyber attack can destroy a company overnight. No warning, no second chance. Imagine hospitals shutting down, banks frozen, and entire systems locked. If you invest in modern businesses, this risk is very real. And one company quietly gets paid to stop this from happening. CrowdStrike is a global leader in cybersecurity, specializing in protecting what they call endpoints. That's your laptop, your phone, your servers. Their platform is used by major corporations, governments, hospitals, and critical infrastructure all over the world. And this is important. CrowdStrike doesn't just protect optional systems, it protects mission-critical environments. Their entire focus is on stopping cyberattacks, ransomware, and data breaches before they can spread. In cybersecurity, seconds matter. And CrowdStrike is built from the ground up for speed and prevention. So, how do they make money? The business model is simple and incredibly powerful. CrowdStrike runs a cloud-native platform called Falcon. Customers pay a recurring subscription fee to protect everything from individual devices and user identities to complex cloud infrastructure. As IT systems get more complicated, a platform like Falcon becomes more valuable. Think about it. Cybersecurity spending isn't optional anymore. Companies don't just delay this kind of protection. They either buy it or they risk losing everything. Now, let's look at the stock. The chart shows strong long-term growth, but you can also see plenty of volatility. This is not a slow and steady defensive stock. This is a growth stock, directly tied to a very real and growing global threat. The revenue numbers tell an even clearer story. We're seeing strong and consistent growth year after year. This is driven by landing new customers and, just as importantly, expanding within their existing accounts. Once a company adopts the Falcon platform, they tend to add more and more services over time. That is the magic of a great software as a service or SaaS business model. What about profitability? Net income is improving, but it's not the main focus for the company just yet. CrowdStrike is still in a phase where it's prioritizing growth and scaling its operations to build long-term dominance. That's a pretty standard playbook for a company in this position. But here's where things get really interesting for investors. Free cash flow, it's positive, and it's growing. This means the business is starting to generate enough cash to finance its own growth. That's a huge green flag for long-term investors. We're also seeing operating margins improve as the platform scales. As more customers join, the whole operation becomes more efficient. Long-term, this business has the potential to reach the high margin levels that make SaaS companies so attractive. Earnings per share are still a bit volatile, as those heavy investments in growth still weigh on the bottom line. But the trend is absolutely moving in the right direction as the company gets bigger. Now, we have to talk about the main risk: valuation. The price-to-earnings ratio is high. There's no way around it. The market is already pricing in a huge amount of future success. So, the risk here isn't necessarily the business itself. The risk is the price you pay to own a piece of it. You also won't get a dividend from CrowdStrike, and that makes perfect sense. This isn't an income stock. All the profits are being reinvested back into the company to fuel more growth. Financially, the company looks solid. Long-term debt is manageable, and the balance sheet isn't under any major pressure. So, let's sum it up. The strengths are clear. CrowdStrike sells a mission-critical product in a world that desperately needs it. It has a fantastic recurring revenue model, and the demand for cybersecurity is structural, not cyclical. This problem isn't going away, but we also have to be honest about the weaknesses. The valuation is very high. Competition in the cybersecurity space is intense, and market sentiment can turn against high-growth stocks very quickly. This is not a set-it-and-forget-it kind of stock. It's a strategic growth play on a powerful trend. For full transparency, I am not a shareholder of CrowdStrike. The business is strong, and the demand is real. But valuation always matters. CrowdStrike is a high-quality cybersecurity leader, but that doesn't make it a low-risk investment. Please remember, this is not financial advice. You should always do your own research before making any investment decisions. Thanks for watching. If you found this analysis helpful, please hit that like button, share it with a friend, and subscribe for more stock breakdowns every week. And do you and T forget to let me know in the comments which company you think I should analyze next.